Well, stocks tried for a rebound this morning, but finished near the lows with the S&P 500 trading in a 7% range, closing below 5,000. So how should investors navigate this environment? Joining me now is Ali Dibadj. He is Janus Henderson Investors CEO. Ali, we need your help.
I think we all need some help.
So for investors particularly, whose portfolios have been overly weighted toward risk and probably equity risk. We know they're out there because of the surveys that have been out there. With the market already down this much, how do you fix that? I mean, let's assume you'd have to sell to buy something else. Do you rebalance now, or do you wait and do it on the way up, assuming there is a way up soon?
Well, look, I think with all the retaliations and the movements that there's just an enormous amount of uncertainty right now, for sure. My view is, Janus Henderson's view is that in every situation, even the situations we are right now, there's an opportunity to rebalance within one's portfolios, within what stocks one owns. Looking for very high quality stocks that were perhaps too expensive before, now have come down a little bit. Investing in those for the long term makes sense. Really separating the wheat from the chaff in terms of that. I think you have to stay quite invested, but stay active in your investments. And there are real opportunities in tech stocks, for example. Some tech stocks will do better than others. All of them have been pulled down. So reallocating between those, I think, makes a lot of sense. Small and mid-cap stocks in particular, where there's real innovation that you believe in biotech stocks, where there's real innovation that you believe in over the long term, that maybe was a little bit out of reach, I do think there's a rebalancing that can certainly happen along those ways. Geographically, too. We were just talking about it. I think geographically, overinvested in the U.S. is typically what folks have been doing. Looking at international opportunities, that diversification, certainly the equity side will bring you benefit as well.
Now, tell me about fixed income, particularly with the possibility of tax rates rising on wealthier individuals. Fixed income hasn't been that sexy. People have been shifting toward equities, but rates look like they're staying higher for a while. Munis can lend some protection. How are you treating those?
Yeah, I think you're exactly right on fixed income. Hasn't been the flavor of the day for quite some time. I think it is now. It certainly gives you a yield that seems to be there for quite some time, but also looking at within that where the high quality fixed income pieces are. That could be in securitized areas. So, for example, we have a AAA CLO. AAA CLOs have done extraordinarily well over very, very long periods of time. That's a place to put money in for sure. Even plain old boring corporate investment grade securities might be a place to put extra money. I do think fixed income is quite attractive overseas as well. Emerging market debt, even with all these gyrations, the sovereign debt that's out there gives you better returns and still okay risk spectrum right now. So I think there's a lot of movement that one could put into play. But again, you have to stay active. You can't just put into a passive index and hope for the best. The tide will not lift all boats. You really have to spend time thinking through wheat from chaff. And look, candidly, at Janus Henderson, that's what 340 people do every single day, our investment teams.
Tell me about this Guardian Life Insurance Company deal that you guys just did and the big picture that investors should know about that really tells you that kind of a deal with an insurance company in this environment makes sense.
Well, I'd say a few things. Number one, great deals are still going to happen. No matter what happens from an uncertainty perspective, no matter what happens out there in the marketplace, deals that really make a lot of sense, partnerships like Janus Henderson and Guardian will continue to happen. This partnership makes perfect sense because it really supports Guardian's, which is a large life insurance company, employee benefit company, one of the most respected in the whole world and in the U.S. They're delivering for growth for their policyholders and delivering great returns for their policyholders. Matching up with Janus Henderson that has that expertise makes this deal a match in heaven. What we want to do at Janus Henderson is grow our business, and grow our business in particular in insurance. We have plenty of insurance clients. Post this deal, we have north of $100 billion in insurance assets that we manage. We think this allows us to grow that business even further to the benefit of Guardian and to the benefit of our other insurance clients as well.